But let's get a move on then. Remember, yesterday there were a whole host of announcements made by Piyush Goyal talking about FDI opening up. Contract manufacturing is one space that was looked at closely with 100% foreign investment. We talked to the management of Dixon Technologies about that, as well as price hikes and worries about the slowdown. Saurabh Gupta is the CFO of Dixon Technologies, now joining in. Thank you so much and good morning. Let's start off with the news. The headline that 100% FDI and contract manufacturing, this clearly opens up a lot of opportunities for the industry as well as for the company. What kind of economies of scale are you expecting? Will you be looking at some foreign investment opportunities down the line?
Yeah, I think so. Overall, what the government has done on the FDI, they had given a specific provision for contract manufacturing. So FDI policy already provided 100% investment, but they have specifically now provided for contract manufacturing. As far as our sector is concerned, which is electronics, this policy measure was already in place. There were a couple of companies which are already operating in India. But overall, I think so. This should lead to increased investments in India, increased employment, overall growth in India, and what we see is that it will make Indian companies part of the global value chain, and especially at the time when the international players are looking at expanding their footprint beyond China and locating in other markets. So we see this as India can become a global export hub. So all in all, it's a great reform that done by the government of India.
So just to delve further, with this 100% FDI for contract manufacturing, are you not worried that competition will increase because there's already quite a bit of stiff competition in the market?
Yeah, absolutely right. Competition will definitely increase. There is still a high competitive intensity because in contract manufacturing, the margins are already low. So you need to be up to the mark. You need to achieve a good scale and size. So you need to align with now a global policy with the global competition. So overall, it's good for the sector. But yeah, definitely the competitive intensity will increase.
Let's talk about the sector as a whole, because we've been flagging off the consumption slowdown quite significantly. White goods space as well has seen a bit of a slowdown in volume. So what are you gauging from your clients? Are you seeing this impacting your business, your revenues in any way?
Yeah, so I think so. Definitely there is a slowdown. When we speak to our customers, we see that there is a slowdown in the market because of the whole NBFC crisis or liquidity crisis that has happened. But I think so. We have been fortunate that we have added a lot of customers in our lighting vertical, in our consumer electronic verticals. So some of the brands, even in the slowdown, doing really well, are existing brands. So we are very optimistic that this year we should be able to grow 35-40% in terms of revenues and profitability. We have a very strong order book. We delivered very good results in Q1, and we are continuing with a good and strong order book in Q2 as well.
Okay, so we're halfway through Q2 FY20. You spoke about some of the, the kind of traction you've seen. You've got the festive season around the corner as well. So do you think that we can go in with expectations of, a boost in your revenues? What has been the demand picture up until now? What are you expecting from the festive season?
Yeah, so we see a great festive season. We have a strong order book for Q2, and Q2 generally, historically, has always been a better quarter just prior to the Diwali. So we have a strong volumes as far as LED TVs are concerned in Q2. Our volumes in Q2 should be better than Q1. Our volumes in lighting and washing machine segment should also be better than Q1. So overall, we'll see a significant amount of growth both quarter on quarter and year on year, and we expect to close the year by at least a 35-40% growth in both revenues and profitability.
Okay, and will, do you think that the consumer electronic business, that contributes nearly 44% of your total revenues, that has grown strongly? Are you going to be able to sustain this kind of a growth level as per what you've been talking about?
That's at least for this year, I think so. Our volumes in LED TV, which is consumer electronic, should grow by 70 to 80% this year. And major part of that will come in the first half of this financial year. We see this trend continuing because our major customer there, Xiaomi, is doing very well in the marketplace. And similar is the trend in the washing machine because our major anchor customer, Samsung, we have a very strong order book from them, and they are doing very well in the semi-automatic category. Also, now we are getting into the fully automatic category, which should be up and operational by Q1 or Q2 of next financial year. And we are also now expanding the capacity in the semi-automatic category. So both put together, we are talking about 2 to 2.2 million kind of a capacity, both in semi-automatic and fully automatic, which will take care of almost 30% of India's requirement. So the total market is somewhere around 6 to 6.5 million.
Reports are suggesting that, appliance will cost about 5 to 10% more because of the energy efficient models. Should we expect a price hike in Dixon Tech too? And what is your pricing strategy going forward?
Yeah, so whatever is the increase as part of our agreements with the customers, that will be passed on to the customers. So definitely the energy efficiency norms will increase the costing, and that will be passed on to the consumer. So there will be no impact on the margins.
Okay. You also have a strong leadership when it comes to 3 segments. That's LED, TVs market, semi-automatic washing machines, and of course LED lights as well. Tell us which segment, according to you, is going to be the key growth driver for the company in, say, the next 2 to 3 years.
So we see the growth coming out of all the 3 segments. But if you're talking about the international growth, the export growth, that will initially start with the lighting segment. As such, we are already seeing a significant amount of traction there because now we have become globally competitive and are among the top 5 companies in the world as far as our volumes are concerned and as far as the product portfolio range is concerned. And we are talking to some large global chain of stores in that. So that should our export play should start either in Q4 or Q4 of this financial year or Q1 of next financial year, and then gradually we see with the scale and size, we see that export opportunity coming up in the washing machine segment as well, which should take another 15 to 18 months down the line. But we see a significant amount of revenues coming from exports in 2 to 2.5 years from now. And TV should continue to grow as far as domestic market is concerned. We have Xiaomi as a customer, and we are also in advanced discussions with a very big brand in India, which we are very optimistic to get them in the system.
And tell me, how will the capex of 65 crore rupees pan out for FY20? How is it going to be utilized towards increasing production and enhancing capacity? And when will it really reflect on your operational and financial performance?
Yeah, so 65 crore of capex this year would predominantly go into 2 verticals. Of course, there is a capex plan for each of the verticals, but the major capex would go into the mobile segment, where we have got a major breakthrough, and we have signed with a very big account, holds a very significant market share in both Indian and global market. So that client we should start the production by October first week, and we should trial for that account would start in September. So that account should start generating profits for us after some bit of ramp up from post October. So some part of capex would go into that, and then next big amount of capex would go into the fully automatic category, top load version, which we are setting up, and we are creating a capacity there of almost 0.5 million. We already have signed up with a very big customer in that segment as well. And in addition to that, there will be some backward integration or some capex on migration to own design in TV and some other verticals as well. But major part of the capex this year will be earmarked for mobile and fully automatic washing machine.
Okay, thanks much for joining in, Saurabh, giving us a sense as to what the FDI boost means for the company, the sector, as well as your projections for growth and volumes. That's the take coming in from Dixon Technologies. They expect a 30 to 45% growth overall coming in for revenues and a strong order pipeline.